Hey everybody, it's Shannon from Alphatrends.net. Today is Friday, the 22nd of December, and we've got just 4 weeks left in the year for this market. Looks like we're going to close positive everywhere except for maybe oil. So let's take a look after another good week, except the semiconductors lost a little bit. On Wednesday, we had that sell-off, and it looked like maybe it was going to get stuck below the week-to-date volume-weighted average price. Instead, it pulled back from there, and then yesterday got back above it. We're back above the 5-day moving average, and heading into the final week of the year, this is our most important near-term level that we want to see hold as support. Anything above that is just to be considered a small pullback. As I've been mentioning over and over again, the primary trend is higher, so I don't look to sell short these breakdowns. I only look to say, hey, there's greater risks in here, but I don't want to sell short and fight the primary trend. That's what keeps me from losing money on the short side when this happens. I'd rather be in cash. I haven't been in cash, but I'd rather be in cash and miss out on an up move than I would be short. Rather not be short. That is. The Nasdaq broke to an all-time high this week, and we did get that strong pullback on Wednesday. But same story. That was it for the selling. Buyers came back in. We closed above the 5-day moving average, and next week, as long as we're above this 402-ish level, then I think you've got to look at it as the buyers remain in control. The Ethereum we've been talking about a little bit, so I wanted to follow up on that one. I often leave it, if I leave it for the end, I forget about it. So here you can see we are still fighting this anchored volume weighted average price from the 2021 high, but things are, we had a good week here for Ethereum, and even a little bit of further strength here today. Sorry, that got cut off. I had that sized wrong. But Ethereum looks like it's going to make an assault on this level and probably be able to continue higher. So that's it for crypto. The Russell 2000 also continues to chug higher here. The primary trend is now higher. We're still at the top end of this range, and year-to-date gains, where you look at the S&P, we're just a couple of points away from an all-time high, and the Nasdaq did make an all-time high. We still have another 30 points, 15% to go for the Russell 2000. So I see a lot of people are predicting this is where we're going to see strength next year, and they may be right. I look at it as what I'd really like to see happen, and I always say the market doesn't care what I want, but I'd like to see something like this happen first, and then perhaps we could build a better foundation for continuation. These markets have all gotten extended. It doesn't mean they can't continue to move higher, but in order to present lower risk opportunities, I'd love to see a pullback first. There's still great opportunities in the market here. We spoke about some of these. SMAR still long some of this one, and that one has been a decent one from $45.50 for Alphatrends subscribers. The bigger one, we got lucky, truthfully, in this one. LQDA, we got involved at $7.55 on what was that, Tuesday, I think, and then it gapped up on some news, and we sold a third of that one quickly and have two-thirds of this one left with stops at 10.58 and 9.71. Also, Mobileye, I mentioned that on Wednesday. That one triggered for us yesterday. So Mobileye looks like it's on its way. It's a choppy stock, though. It's got these big ranges. I don't really like the personality of the stock. The point is that there are still opportunities out there setting up, and that's what I do each and every day for Alphatrends subscribers. The Alphatrends subscription is going up in price in January, by the way. If you've been thinking about it, now's the time to take a 2-week trial, see if it's for you. And by the way, that reminds me, while I'm doing housekeeping like that, if you're watching this on YouTube, please give it a like, subscribe to the channel. People tell me that helps with the algorithms and all that. Semiconductors closed down a little bit this week, but only ever so slightly, and that's because we closed right at the highs last week. We had a small digestion of gains. We came down to the anchor from the beginning of this most recent rally right in here, and buyers remain in control. If we break below this level and let's say hold below 171.5 for more than an hour or so, It's likely we'll come down and test this level again, but even if we do, we're still in a giant uptrend. This is a healthy bullish market. Anyone who is trying to sell short this market doesn't understand trend trading. The trend is your friend. It's innocent until proven guilty. Don't fight it. Don't, if you're going to be a day trader and try to short these little pullbacks, that's fine, but just know that, day trading isn't appropriate for most people. Biotech stocks still heading up towards the top end of their range, perhaps here. We did see a slight consolidation at this prior high, and this was another market I'd pointed out. Even though we made a lower low, I wasn't going to get short simply because the primary trend is so strong, and we're in that seasonal period of strength. The so-called Santa rally began yesterday and goes through the first 3 days of next week, so basically Tuesday, Wednesday, and Thursday, because Monday's a holiday. The financial stocks also holding up well in here. No reason to get short these things. Below 36.90, maybe we see a little bit of weakness, but still overall quite bullish. I had mentioned gold in particular on where did that chart go? I've got to look up let's look it up on here, because on gold I put this on Twitter yesterday saying it looks like it's maybe finally ready to do something here. It had a big break here, and if we look at it on the weekly time frame, you see we broke out right in here. And what do I always warn about with these breakouts is that when they've expended a lot of energy, this market just came from 1840 and broke out at 2100. When they expend that much energy and then break out, it's typically met with some profit taking in the near term. And that profit taking is looking exactly like just that. It's profit taking. If we put the anchor off of this low over here, where'd my anchor tool go? I thought I have that saved as a favorite on here. I won't waste your time, but if I drew one off of here, we came pretty close to it this week. Buyers are back in control. I think that if you're long gold, your stop goes either under this low, or if you wanted a tighter one right here. As I always point out for Alphatrends subscribers, it's often good to have two different stops rather, and make the trade your own, because there's no perfect way to do it. We're not all trading the same time frame. But this is my issue with gold and gold miners. They gap up and they fail. There's just all these gaps and misdirection, so I don't like to trade them personally. I'm not even sure why I'm talking about them. Merry Christmas, everyone. Have a good holiday, and I'll talk to you next week.